Hello and welcome to today's episode of Let's Talk with Mike. Today on the show we shall be looking at the impact of the CBN's decision to retain monetary policy rate at 27.5% on small businesses in Nigeria. Join us for this interesting conversation. But before we begin, what is the monetary policy rate? The monetary policy rate, or the MPR for short, is the benchmark interest rate set by the Central Bank of Nigeria to influence the cost of borrowing or money supply in the economy. The MPR also serves as a benchmark that influences the amount commercial banks charge when they lend money to private individuals or businesses. The CBN, at their Monetary Policy Committee meeting on Tuesday, retained the monetary policy rate at 27.5%. The Apex Bank stated clearly that this decision will help to reduce inflation, stabilize the naira, and attract foreign investors into the economy. The decision also implies that borrowing money in Nigeria is one of the most expensive in the world, especially for small businesses, which constitute the backbone of the economy. So how does the decision of the CBN to retain MPR at 27.5% affect small businesses in Nigeria? Number one, higher borrowing cost. With an MPR of 27.5%, commercial banks are poised to fix their interest rate at between 30 to 37%. This implies that small businesses in Nigeria will find it extremely difficult to borrow at such rate. Even if they do, they will find it very difficult to pay back because of the low turnover. This, in the long run, will push small businesses into adopting unconventional means to raise capital for their businesses. Number two, reduce access to credit. With an interest rate of 27.5%, businesses in Nigeria will find it extremely difficult to get the much needed credit to expand their business. Now, with shrinking access to credit, it becomes extremely difficult for businesses to employ workers to expand their operations or even make revenue. Now, during the MPR meeting on Tuesday, the Apex Bank also pegged the cash reserve ratio at 50%. This implies that commercial banks will be more skeptical to lend money to businessmen and women because 50% of their income or 50% of their capital must be kept in their reserve. Number three, slowed economic growth. Now, with the inability of businessmen and women to access the needed capital needed for growth and expansion, in the long run, we may see a situation where businessmen and women will begin to close shop. This is because without the much needed capital for expansion, it will be very difficult for them to maintain operational costs or grow their businesses. Now, what is the way out? Number one, the Apex Bank must, without further delay, reduce the monetary policy rate to something reasonable. Secondly, relevant agencies must ensure that businesses in Nigeria have the much needed access to capital for growth and expansion. Thirdly, it is important that we must invest in critical infrastructures such as the provision of good roads and electricity to reduce the cost of production. If these are done, then we can begin to see the growth of small-scale businesses in Nigeria. Let me hear from you. Do you think the decision of the CBN to retain the monetary policy rate at 27.5% will destroy SMEs in Nigeria? Please drop your views in the comment section below. And that is the size of our today's package. If you found this episode interesting, please like, share, and subscribe for more amazing updates. Until next time, thanks for watching.